And now we slowly move to an analysis of commodity currencies done by a FutureTrend channel. And now, as well, like in other major currencies, the situation is really very favorable for the United States dollar at the moment because of a rising yield of United States government papers. As you can see, the Australian dollar also broke below a rather important longer term trend line located around 76.20. Let's see the chart of the Aussie dollar. And here, as you can see on the daily chart, now we are trading below 76.20, where lies longer term uptrend line that was drawn from the lows of January 2016. What does it mean from a longer term point of view? As you can see, an attempt to break above moving average 200 daily line located around 78.12 at the moment, and an attempt to break above of it during the course of previous week was, as you can see, unsuccessful. That means that now a strong rejection from over there and another penetration and closing below a longer term uptrend line means that in the foreseeable future the Australian dollar should remain down pressured, and probably the next level to watch is the lows of December 2017 located around 0.75. Anyway, taking into account the oversold technical indicators, taking into account that a last inflation report that came from Australia during the night hours was not really very pessimistic. As you can see, the trend consumer price inflation published at the level expected, around 0.5% on the quarterly basis. That means that not everything is so bad right now for the Australian dollar. We suggest that during the course of the week the United States dollar will come into correction, will enter a correction consolidation phase. Probably Friday's gross domestic product data coming from the United States will be a reason to do this, to enter such kind of consolidation correction. That means that we suggest to reboard a position in the Aussie dollar long position, and we are ready to buy around 75 to add to our position some more with the stop below 74.90. As regarding the other currencies, the New Zealand dollar long trade recommendation was closed at 71.50. Excuse us that we did not change here the column regarding the existing and position and trade strategy in the New Zealand dollar. We will do this some later. Anyway, the situation here is also rather pessimistic for the future, for the nearest futures of the New Zealand dollar, because right now we are trading below moving average 200 daily line, which are located at 71.82. And all in all, the situation is rather positive for another slide in the price of the New Zealand dollar. As regarding the dollar Canada, here we also entered a small short at 128, but was stopped at a level of 128.50. At the moment we suggest to stand aside from any kind of position, but we will use a possible return closer to 130 level to resell the currency. As regarding the dollar ruble, here the situation is more or less stable. Ruble is at 61.62, as you can see. it's still finding some kind of buyers despite of higher energy prices, and that means that the Russian ruble will be rather immune to a kind of new sanctions imposed by developed countries against Russian Federation. And that means that the future of Russian ruble is not so bad, and we suggest that the pair should remain in the range of 60 per 65, and we will try to buy a pair closer to 60, pivotally important, psychologically important support barrier, trying to chase the currency some higher. At the moment that's all. We wish you a pleasant day ahead. Bye bye for now. It was your Future Trend channel.